Google missed revenue and earnings projections, sending the stock down after hours. 101.42 is a major support level. You can see how we worked our way right down there as the news was digested. They missed on multiple fronts. Earnings 105 versus 118, 76 million beat by 75.69. This is not great because it essentially means that you're in a position where your earnings and costs are too expensive if your sales are going up and you still missed on the revenue or earnings front rather. Cloud revenue, 7.3 billion, up from 5.5, but it was lower than the estimate that was out there. Google advertising 61 billion versus 59.9, 61.2 versus 59 year over year. Alphabet to incur a roughly $2 billion charge in severance charges from all the layoffs. And then you have an exit cost to get out of some office space for about 500 million. That's not the end of the world. The larger issue is drilling into the numbers. This is nice. You can see that we're holding that 101.40, 101.50 level. Hopefully we do. YouTube ad revenue was 7.96 billion versus the estimate of 8.27. So when you start drilling into these, it wasn't great. Google services were 67.8 versus a $69 billion estimate. We just didn't really fire on any cylinders, and cloud missed as well, 7.3. It's not, well, it came in line to down just a little bit, but it's not really a great quarter. Now, could have been a lot worse. And it certainly could have been a lot better. Now, the issue is from where you're at, you're going to have to wait for the conference call. At the time of filming this, the conference call did not happen yet. So you're going to really want to watch this 101.50. That's really been or setting up as our neckline. We're trying to get over it a couple times and failing. You could think about this as a left shoulder. This is a right shoulder, and this is a head, and here's your neckline. So I would watch this level very, very carefully and make sure that you stay above the 101.50. If I didn't, I would probably not want to be in that. And then if you sit here and take a look at the next level where you're going to be wedged in, right, this 105 level up here where you flipped, I think everyone got a little too excited about Meta. Meta is a very different story, completely beaten down with a huge buyback program. Very different than what we're seeing here. Not to be outdone, Amazon missed on a couple fronts. Looked like we were going to go here anyway, and then we just started to pull back. Looked like we were going to start going here, and then we just pulled back as more and more of the news came out and people started to actually read the news. Sales beat, which was great, and that was the original pop, but they missed on the earnings front. The AWS full year sales came in light. They were looking for something in the mid 30s year over year, and that's not what they got. So that was one thing that really stood out. The other is down here. If you go through these numbers, in the range of 121 to 126, that's what they're saying for first quarter in revenue, and the analysts are at 125. So whenever they give you a range like this, they try to take this analyst estimate and put it in there. But essentially, if you blend these two, it'll give you a more accurate picture of where they're at, and that is lower than where the estimate on the street is. Now, the real question is this bad enough to really knock the stock down? We all knew that earnings were not going to be great this quarter. Just like Google, everybody got a little bit too giddy with what we saw with Meta this morning. And everybody wanted to be in the next Meta, and here we are. So you're at that 106 level, and what we're going to see is if we can hold that 103.64. That's a big level for me right in here. I'm going to see if we can hold it. I don't know if this is bad enough to knock the entire, to knock us down more. Quite frankly, it might be a relief that it's just behind us, and then they start focusing on the future. Now, a couple quarters of this where you keep missing and lowering guidance, and it will start compressing the PE on the market. But this is one quarter, and we're going to see how it plays out. Not to be outdone, Apple came out with earnings, and they were not great. Quick headlines, 188 versus 194, 117 in sales versus 121. This is not what you wanted to see, not even close to what you were looking for. This is a very big miss. It's going to be interesting to hear what they have to say about the miss. Getting into all these other numbers, we can obviously do that, but to me, this is just glaring. Just look at the top line. Google, you had to drill into a little bit. Apple is just, it's absolutely glaring what happened here. We can obviously bounce around, maybe gap fill in this range. I don't know if it's going to be enough to knock the market down completely, especially with the Fed behind us and the fact that the Fed is lightening up their stance. That has not changed. The question is, how much earnings deterioration did the Fed cause? That's the real question now. And we're starting to see signs that there is some of that in some of these names. But it might not be as bad as we think. For example, tonight Qualcomm lowered guidance and the stock traded up a little bit after hours. And then on that news, all it did on the lowered guidance was just go back to roughly flat. So we're not really falling out of bed here. These are not disastrous moves after hours. And that's the one thing that we always want to focus on, right? We want to focus not only on what the news is, what the stock does. And right now, we're not really falling down. Now, obviously, these stocks are down. So you're going to say, what do I mean by that? Well, what I mean is, if you look at this range, all you did was come back to Wednesday. It's not like we're down $20 on this news, and this is a really bad beat. So we're down $5 on a huge move because people were getting aggressive, and the RSI on these names were coming up. We're going to go over that towards the end on the indexes, some things to be aware of. So it's not really a place where I would be very bearish. You could have a pullback, but on numbers like this before, if this was September or July, we'd be down $10, $15. We're barely down 5. We're down roughly 5 and change right now. Same with Google. And I just want to point this out. All we're really down is we're down half of where we closed the day before. So again, it's not like we're falling out of bed here. You're back to still a gain over Wednesday's prices on Google on a stock that missed earnings. What I will be focused on are names like Meta. That's where my focus will be tomorrow. The quarter was good because they explained what they're doing. Now, we could see that with Amazon, Google, Apple, they could explain what's going on. Why did Meta move? Meta moved obviously because of the buyback, but also because Zuckerberg basically came out and said, yeah, this metaverse is going to take a lot longer than we anticipated. We're reeling back some of the costs of it, and we're taking a much longer term view of it. He admitted it cost $13 billion and maybe they spent too much money. So admitting the mistake, moving forward, not giving up on it, just understanding that it's going to take a longer period of time. When you start seeing that, like you saw the cut in CapEx, means they're doing the right thing. Maybe Google, maybe some of these companies are going to come out and make some statements. We just don't know yet. And this is at the time of filming this, we really don't know. But they're not big drops. So I'll be looking at Meta tomorrow, seeing if I can stay in here. Now, in your comments, I get asked a lot about trades that we do during the day in the Alpha Chasers community. So I will just walk you through this one. And I do read every comment. So any suggestions that you have, just please pop them in there and I'm more than happy to answer them. See how this line comes right across? So you have a level right there and that just happens to be where you popped, right? So we know what this is. We know this is pre and post market, right? So the light section right here is the pre, this is the post. So you take that pre-market high and you mark it off. And then you just kind of take a look and you see how you do. Now, when you get over that pre-market high, which also was tied right here where you tried earlier, comes down, holds our little line, flips. That was pretty much it. It's a very simple day trade. Okay? And I held some of this for a longer swing trade. But as far as day trade, it's very simple. Trade it up. And then just on the way out, I just kicked it. Did very well with it. I was very happy. When you're day trading, I'm not interested in trying to get the top. That's not really what I'm trying to do. I'm trying to get the meat of the move and get out with the least amount of risk. So this worked fairly well, but longer term, it's very hard to look at this chart and not feel bullish. You can obviously see that we're above on the moving averages. You can see where we're at. You can see that you are above the 200. You are curling on the 55. There's very little to say or do here that I would feel that I have to all of a sudden get out. This is one we went over twice, I think, in these videos. We bought it right in here in the newsletter, link in description to get the newsletter. And what we're looking for is we're looking to see if we can push and keep going. In other words, we're looking to push and keep going. Look at these bars. Look how full they are. They don't even pull back. Okay. Now you're down a little bit after hours, about 20 cents because of what's going on this evening. But what's happening is you're just seeing constant buying. If we zoom in on a 10-minute since the day that you broke, you have not even been able to make a lower low without finding some support. Even into the close, you could see the buying. One of the things that got us interested in buying this was this gap. See this gap over here? We never filled the gap. So that means when the volume is going to be really light in here because there's not going to be any trading or very light trading in here, but you have this obvious gap between where you gapped down the previous day and then kind of the backfill on the way back up, right? So what this does is this creates somewhat of a vacuum, a space where the stock can move a lot faster. I think this 2071 is realistic. Again, this is something that we bought down here at like 1540, 1550 in the Alpha Chasers community. To get on the wait list of the Alpha Chasers community, there is a link right here in the top right. Simply click the link and you will be added to the list. Overall, it's been a great trading week. Let's see what happens tomorrow. Let's really focus on what happens with these conference calls and go from there. Everybody have a great evening.